Mercado Libre, which is sometimes known as the Amazon of Latin America, reported quarterly financial results after markets closed on Wednesday, November 6th. On the day after the company announced those results, the stock price is falling by more than 16%. So why is the stock price falling? What was in this release that's causing the stock price to fall? I'll answer that question in this video. Also, is this stock price decrease a buying opportunity? Is this a time to buy the dip? I'll also answer that question in this video. Remember, coming into these results, I've had Mercado Libre stock rated as a buy all year long in 2024. So I'll update that recommendation here and let you know if I still think it's a buy. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Mercado Libre reporting revenue and financial income of $5.3 billion in the quarter. That was up 35% year over year and 103% if you exclude the impacts of currency fluctuations. Mercado Libre's business has been extremely volatile because of currency fluctuations and the rapid rise of inflation in one of its countries that it operates in, Argentina. And so there's been a lot of volatility in the company's reported results and the currency adjusted results. And I'll try and exclude those factors in this video. I'll try and highlight the underlying organic demand for the company's services and try and exclude the impacts of currency fluctuations because nobody can really predict currency fluctuations and what direction it's going to go in the long run. The company's total payment volume increased by 34% to $51 billion, and gross merchandise volume increased by 14% to $13 billion. The management team saying that momentum is strong across the business with solid growth in unique buyers, fintech monthly active users, gross merchandise volume, the credit portfolio, and acquiring total payment volume in all major geographies. Our competitive position is strengthening as retention improves across the business. That's exactly what you like to hear as an investor. You would be surprised after this opening statement from the company's management that the stock price was down as much as it is on the day following the results with this kind of opening. But there were some reasons for concerns, which I'll share with you in just a little bit. All right, for the commerce segment, they're excited about the prospect of driving offline retail online in Latin America, where e-commerce penetration lags the USA by almost a decade. I've been talking about this for a few years now with Mercado Libre, and that is that the region it operates in is expected to grow much faster than the United States overall, and the online migration in that region is expected to grow much faster in the next 5-10 years as well. So you've got a double benefit there for Mercado Libre. So Argentina, which has been one of the more volatile countries, right? The new president came in and is impacting all kinds of change in that region. And it's causing a lot of inflation. It's causing a lot of disruption. Economic growth has been volatile. And so I've been following trends there. And in Argentina, our items sold increased by an impressive 16% year over year, as consumption trends continue to improve. And I believe that looking at items sold is the most important metric right now in Argentina because prices are so volatile. Inflation is out of control. It's going up and down. And so if you look at items sold, you get a better sense of the company's organic demand in that region. The number of things sold, right? You're not thinking about total dollars spent, but the number of things sold. And if people are buying more things, then that means that demand is increasing for Mercado Libre's services, and that's good news. Unique buyers across the region reached almost 61 million, rising 21% year over year, but they're still less than 10% of the overall market size. If you look at the total addressable market, the company saying they see plenty of scope to expand their user base, given the population of Latin America is more than 650 million and growing. So they are still less than 1/10 of the market. So lots of room to grow there, lots of opportunity for Mercado Libre in the long run. So here's one of the reasons for concern is that the company saying that as such, we opened 5 fulfillment centers in Brazil in the third quarter, plus 1 in Mexico. You might say, well, why is this headwind? Why is this bad news? They're investing in growth. Well, because when companies dole out for these fulfillment centers, when capital expenditures increase, the risk increases. And investors are usually concerned when they see increases in capital expenditure. And I'm going to share with you the year-over-year growth in capital expenditure for Mercado Libre. And this raises concerns, right? You saw one of these biggest risks play out if you've been following my videos on Intel stock. Intel really increased their capital expenditures. And now that's one of the worst case scenarios where they did a lot of CapEx in the last 3 to 5 years. But that's just the extreme scenario. That's the scenario that investors are worried about, that all of this capital expenditure goes out and it's misplaced, it's overdone, and demand does not rise to meet these investments, and so it hurts profitability. And so this just concerns investors. Investors are always concerned, but I take a more practical approach here, and I look at a company's reputation, their history. Have they been effective in allocating their capital? And if they have been effective in allocating their capital, and the management team has been good at this, I tend to give them more rope. I like to see them spend on CapEx if they've been good, right? And one of the prime examples I give for this is Netflix. Netflix is great at creating content. And so if they tell me they're increasing content spending by 50% next year, I would be happy about that. I would say, great, you found more content to make. And so I take that kind of approach to capital expenditure. If the company has a history of success on this, I like to see them do it. If the company does not have a history of success, I become concerned the more they increase their CapEx. So looking at the business broad-based, you can see fintech monthly active users rising in the 9 months that ended September 30th to 56 million. That's up from 42 million in the same time last year. Unique active buyers rose to 87 million, and that's up from 74 million. You love to see this. More people on the platform, spending more money on the platform, buying more things on the platform. The number of items sold increased by more than 26% to 1.262 billion, up from 991 million. And looking at the most recent quarter, items sold increased to 456 million, up by roughly 100 million from the same quarter last year. Solid growth across the business. Here's what I mean with the capital expenditure. You can see in the 9 months ended September 30th, CapEx increasing to 555 million, up from 329 million in the same time last year. And in the most recent quarter, it increased by roughly double to 223 million, up from 126 million. So this is what had investors a little concerned. Also, an increase in the amount the company's giving out to credit cards and increasing credit risk. So some reasons there that caused the stock price decrease. Of course, geopolitical concerns. The U.S. election has caused a disenchantment with stocks outside of the United States. And so that's partly contributing to this sell-off as well. But I think the sell-off is, if you look at the price, it's down over 16% on the day after the announcement. And Mercado Libre stock now trading at a forward price to earnings of 36, which I think is a reasonable value to pay for this excellent business. So I have reiterated my buy recommendation today, stating that I still think Mercado Libre stock is a buy. And I do think that this dip is a buying opportunity for long-term investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.